Hi everybody, it's Robschild. Today is Monday, August 4th, 2025. Today's episode begins with our main headline, Dead Cat Bounce, Flows Chase the Fashion. Stocks went up today, but when we look at the SPY, which is an ETF that follows the S&P 500, had half the volume that we had on Friday's sell-off after an overall bearish entire week with red candles. So a lot of selling volume, followed by today's bullish small amount of volume. That's our first clue that this is probably a dead cat bounce. The second clue is where the money is flowing into. It's going into the fashion. It's going into the really popular stocks, Nvidia, Microsoft, Google, Meta, going up by enormous numbers. When you see 3%, 4% on multi-trillion-dollar companies at enormously high PE ratios, all on light volume. When the cats are away, the mice will play. When we get to the charts, pretty much everything supports this idea. So stick around. You're going to want to see the rest of the show, especially at the end. We're going to talk about personal savings. But for now, we'll go into our second headline. There are 3 25 basis points cuts now priced into the Fed funds futures for the rest of 2025. It was only about a week ago when we weren't sure if we'd even get one cut for the rest of 2025. And now we are seeing with 94% probability one cut on the September meeting, followed by most probably 2 cuts in the following 2 meetings. While rate cuts seem good at first, rate cuts don't mean that the economy is doing well. In fact, it's quite the opposite. Moving on to our community topics, what moves, if any, did you make today, and why? Robschild, I bought some more UVXY calls today. One piece of my reasoning is that today's red bar in the VIX is an inside day on a strong green candle to the upside, suggesting that this is just a break on the way to higher highs in the VIX, I think. That's why I made that move. What did you do? Comment below, and what's your reasoning? Coming up, not a lot of data coming out this week. We have a few earnings tomorrow. Main thing is the Thursday initial claims, continued claims report still. After the BLS head got fired, I'm wondering if there's going to be a little more fire behind making sure not to under-report bad news in the initial claims too. I don't know. It's just like a crystal ball idea that I kind of had. But as always, too, we have tariff updates. Thank you very much for watching the Robschild Show, subscribing to my show. I love all your subscriptions and your support of the channel, your comments, and support. No changes to the daily reminders macro views. See my website to read through them. No changes to the crystal ball readings nor the Robschild portfolio, besides a little bit of UVXY calls. And yes, I still, in case anyone was wondering, I still am holding a Bitcoin short and a NASDAQ short. On to more charts, starting with TNX, the 10-year Treasury note yield, continuing Friday's move to the downside. Again, a 10-year Treasury note yield dropping, although it is sort of good because, we're not going to have to worry about fiscal dominance as much anymore. It's not actually a good thing because all it really means is that the economy is indeed slowing down, all while we still have we're sitting on an obviously hawkish Fed at the moment still. If we add some trend lines to the 10-year Treasury note yield, you see this green line here acting as the neckline of a head and shoulders, breaking it Friday and confirming today. So yields are still looking quite bearish, which is good for TLT, my favorite place to be. We'll see what happens moving forward. HYG divided by SHY getting a minor bounce is what I would call it. Even the HYG fund itself getting less volume than Friday's volume, maybe about half. These are all signs of a dead cat bounce, not a reversal. Same thing going on in Bitcoin. Just taking a look at the volume of all of these red candles dropping until Saturday. Yes, the prices have been rising Sunday and today, but not on heavy volume, not on more than normal volume, suggesting more of the weight is still on the selling side. Next, I want to bring up crude oil, dropping today 1.5%. I did say last week that I didn't think that this bullishness in crude oil would last very long at all. That turned out to be very correct. Oil continuing towards that $65 barrel level. I do expect it to go below this level and much lower sooner than later, but that's just a crystal ball rating. A less bearish and more under the radar fund, XLU, an ETF that holds utilities. It's defensive. It's been quietly accumulating, quietly getting quite bullish with many green candles, all while more risk assets are hanging by a thread. Dr. Copper with a PhD in economics. If you can see it, there's these two little tiny green candles. We're finally not just dropping straight to the floor. For the moment, what I see is a pretty clear, very pronounced and large bear flag. So it looks like copper's probably going to continue to the downside to me. And last chart of the day, as promised, this is from the Fred website. Personal savings rate. What percentage of people's earnings are being saved? Anyone want to take a guess? How much are people able to save? This current view of the chart dates back to the 1960s and goes all the way to today in 2025. I just want to point out that we have been basically under 5% in the personal savings rate for quite a while. The only few times that we've been in that range in the past was, as usual, right before the great financial crisis and also before the dot-com bust. The most recent reading of this being only 4.5%. From 1960 until the mid-1980s, it seemed that it was normal to save 10 to 15, as much as 15% of the money that you made. And in the 90s, from 5 to 10%, really during normal times, staying in that range, 5 to 10%. And, post 2020, we've been staying below 5. I don't know about you, but I think there's more trouble ahead, and that's all from me and my crystal ball. I hope you enjoyed, and thank you for watching. Don't forget to subscribe, and see you next time. Robschild.